Imagine a city, right? Gothic spires, modern masterpieces, the smell of paella drifting through these old streets, the Mediterranean sparkling. We're talking, of course, about Barcelona. It's a place that just pulls people in. But, what's actually happening beneath the surface in its property market right now?
That is the big question, isn't it? And that's what we're diving into today. Welcome, everyone, to a deep dive into the Barcelona real estate market. We're focusing specifically on the first half of 2025. And look, this isn't just about spitting out numbers. It's really about understanding the forces, the sometimes quite complex forces, shaping one of Europe's most dynamic cities.
Exactly. And our mission today is, well, it's to pull out the really important bits, those nuggets of knowledge and insight from a whole stack of recent market reports, articles, data analyses, all from the first half of 25. We're basically giving you a shortcut. You get to be truly well-informed, get those aha moments without drowning in data.
And if we just sort of zoom out for that high-level view
Yeah.
of H1 2025, the headline is pretty clear.
Right?
Robust overall growth, residential prices, rents, they've really surged. Transaction volumes are hitting levels we haven't seen since maybe the mid-2000s boom. It's like the market's firing on all cylinders in a lot of ways.
That sounds significant, really significant. And on the commercial side, is it the same story mirroring that residential boom, or is something different going on there?
It's a bit more of a mixed picture. Actually, we're
Yeah.
seeing retail and logistics doing incredibly well, booming even. Strong recovery, lots of investor confidence there. But office leasing, it had a slower start to the year. Definitely signs of a rebound coming later.
Yeah.
But yeah, a bit sluggish initially.
Interesting. Okay, so overall optimism from investors. It depends on the sector. And are there like big underlying factors,
Huh?
regulations, new developments?
Oh, absolutely. Underpinning all this, you've got that general investor optimism, sure, but also new regulations that are, let's say, shaking things up a bit, and some really major, potentially transformative infrastructure projects underway. These could genuinely reshape parts of the city in the coming years.
Okay, given that picture, that robust growth, what's really driving this surge in residential prices and rents? Is it just simple demand, or are there deeper things happening shaping this sort of unique housing situation in Barcelona? Let's maybe unpack the residential story first, because it really does sound like a standout.
It absolutely is.
Yeah.
Residential property prices in Barcelona City, they've been on a remarkable climb. By Q1 2025, the average sale price hit €4,804 per square meter. Now, that's an 11.3% increase year on year, and it's building on already strong growth in 2024, which was around 12.8%.
Wow, double-digit growth 2 years running. That's really something. Is that happening everywhere in the city, though? Or are some neighborhoods pulling away from others, maybe creating new investment spots or, well, affordability issues?
Yeah, good question. It's definitely not uniform. Popular districts, think some RT example, they've actually seen even higher appreciation, often beating the city average. Meanwhile, some of the more, let's say, affordable suburban areas, they offer some interesting relative growth potential, because their entry prices are just lower. The whole thing is really fueled by a structural undersupply, simply not enough homes being built, plus persistent demand from locals and increasingly foreign buyers.
And it sounds like the rental side is just as hot. What's the scale of that increase? Where's the pressure most intense?
You're right to flag the rental market. It's intense is the word. The average rent in Barcelona City hit 23.9 per square meter per month by Q1 25. That's a hefty 15.5% higher than just a year earlier. And, Barcelona remains Spain's most expensive city to rent in. That tells you a lot right there.
15.5%.
Right.
Are other specific examples, like districts where rents are really just going through the roof? And what's keeping occupancy so high?
Yeah, definitely. Example rents, for instance, they jumped roughly 20% year on year. That's huge. And high-demand zones like Sarriá Sant Gervasi, parts of Saint Martí like Poblenou or Diagonal Mar, they're commanding top rents. We're talking €25, even €30 per square meter. What keeps occupancy high and keeps prices climbing is that chronic structural undersupply we mentioned. There just isn't enough new housing being built to meet the demand. It's fundamental.
Okay, so what does this all mean for someone maybe looking to invest or just trying to understand the market value? How are rental yields doing when prices are rising so fast?
That's a really important question because, yeah, rising prices often squeeze yields. But here's the thing. Rental incomes have also surged right alongside prices. So that's kept gross yields pretty attractive, actually. In early 2025, residential properties in Barcelona were averaging around, say, 5.5% to 6.0% gross yield.
And is that very much across the city? Different risk profiles in different districts?
Oh, absolutely. You'll see lower yields, maybe 3.2% to 4.0% in those prime central zones, like example. But investors see that as higher security, more stability. On the other hand, working-class districts, maybe Noberes or Sant André, they can generate higher yields, sometimes 4.8% up to 6.2%. Lower entry prices, but still solid rental demand. And interestingly, Barcelona's yields have stayed stable, maybe even ticked up slightly. That's different from the national average in Spain, which saw a little dip. Shows Barcelona's market strength.
That's a key point. And buyer activity sounds like it's been through the roof as well. Are we talking like record levels?
It has been bordering on a frenzy, yeah.
Yeah.
Housing sales in Barcelona province jumped. Get this, 25.4% year-on-year in Q1 2025. That's reaching levels really close to the peak of the last boom in the 2000s. It's partly driven by better mortgage conditions. You mentioned Euribor earlier.
Right, the interbank rate.
Exactly, the Euro interbank offered rate. Basically, the rate banks lend to each other at. When it dips, even slightly like it has, that makes mortgages cheaper for buyers. And borrowing costs lower for investors. It just fuels demand.
And foreign buyers, still a big factor driving that demand.
Definitely. They accounted for about 14.5% of home purchases in early 2025. That's almost double their share from just back in 2021. Yeah. So this combined demand means a really high absorption rate. Properties are basically snapped up almost as soon as they're listed. If something's well priced, it sells fast, often at asking price, sometimes even above. Because again, new construction is so limited and the unsold new home stock is near historic lows. It's classic supply and demand imbalance.
Okay, moving beyond just the numbers, what are the drivers here? The big factors really shaping this market, particularly residential, any major government policies in play?
Yeah, one of the biggest is Spain's new housing law, passed in 2023. It allows for rent caps in areas designated as stressed residential markets. In Catalonia, the region Barcelona's in, they designated 140 municipalities, including Barcelona itself, as these stressed areas.
Right, so what's the actual impact of that? Is it working? Is it cooling the market down? Or
Well, it's creating a really interesting dynamic. The law caps rent increases on existing leases. It was 3% in 2024. From 2025, it's tied to a new index, the IRRV, the index of reference for rental contracts. It's meant to be more stable than inflation. And for new contracts, small landlords can't charge more than the previous rent. Large landlords have to stick to specific reference price ceilings. Now, it definitely adds burdens for landlords, more complexity. But has it fully tamed the market in H1 2025? Not really. Many new leases are still setting record highs. It shows that even with direct policy intervention, Barcelona's demand-supply imbalance is just so strong. The controls are struggling to significantly cool things down. It makes you think about the limits of policy against strong market fundamentals.
that's a really crucial point. Okay, besides regulations, what about efforts to actually increase the housing supply? Any big projects that might make a difference?
Yes, definitely. The Barcelona City Administration has launched something called the Player Year Investment Plan. They're earmarking $320 million through 2027 specifically to boost affordable housing. The goal is pretty ambitious, building over 4,000 new public housing units, places like Sant Andreu, example. But, and it's a big but, these things take time. You're looking at 3 to 5 years typically before those homes are actually ready. So it's not an immediate fix for the current crunch.
Right, long-term potential, though. What about big infrastructure projects? Barcelona always seems to have something massive under construction. How do those affect property?
They're huge catalysts, absolutely. Look at the Sagrera Station being built in Sant André. It's this massive multimodal railway hub, one of Spain's biggest infrastructure works. Should be fully done by 2026. It includes this huge 3.5-kilometer urban park on top. It's set to totally transform that area. They expect it to draw in something like 5,000 new homes, plus commercial space around Sant André la Sagrera. It's basically creating a whole new urban center.
That sounds transformative for that part of the city. And the Camp Nou, FC Barcelona's stadium. How does renovating a sports stadium affect real estate?
Well, it's a $1.5 billion renovation. The Spotify Camp Nou, as it's called now. It's set to partially reopen late 2025, fully complete in 2026. Project that big inevitably lifts the property market in the surrounding district, less course in this case. Better amenities, more foot traffic, just a general buzz and desirability around the area. It acts like an anchor, drawing value towards it.
Makes sense. Okay, one last thing on residential. Barcelona's known for being tough on tourist rentals, right? Short-term lets. How's that playing out?
Yeah, the rules are very strict, probably some of the strictest in Europe. There's a ban, a moratorium, on new short-term rental licenses, and they're really cracking down on illegal vacation rentals. This has a couple of effects. One, some apartments are slowly coming back to the long-term rental market. Helps supply a little bit, marginally. But more significantly, it's really shifting investor strategy. Many are now focusing on standard long-term leases, or maybe medium-stay corporate rentals like a month or more, just to avoid the regulatory hassle and risk. The city's message is clear. Housing is for residents first, tenants need stability, tourism comes second in the housing stock, and investors, they're adapting.
Okay, so pulling all these threads together, the rising prices, the rent controls trying to catch up, these huge infrastructure projects, what does it all mean for the rest of 2025? What are the forecasts saying for residential?
Well, the local experts, they're forecasting continued price growth through 2025. Maybe at a slightly slower pace than the first half, which was pretty frantic. Singular Bank, for example, they're projecting about a 9% cumulative rise for Spanish house prices across 2025-2026, and Barcelona is expected to be at the higher end of that. Maybe, say, plus 5% to plus 12% home price increase just for the city itself in that period.
And rentals, even with the new rules, the IRRV index, still going up.
Yeah, for rentals, even with that new index trying to stabilize things, rents are still generally expected to climb, probably in the high single digits. It really comes back to those persistent supply shortages we keep talking about. There just aren't enough places. Rental yields should stay pretty solid, that 5–6% range. They might even improve a bit if those anticipated interest rate cuts happen. Lower borrowing costs make buy-to-let more attractive, right?
So the underlying economy seems strong, driving demand. Are there any potential clouds on the horizon, risks that could throw this off track?
Well, no market is risk-free, of course. But Barcelona's economy is pretty robust. Catalonia's GDP growth is around 3–4%. Unemployment's about 7.9%. That's a solid base. Then you have improving financing conditions, thanks to Euribor coming down a bit. And that's sustained demand from both locals and foreigners. So, barring any major unexpected shocks like a big global economic downturn or something, Barcelona's housing market looks set for more growth, more high transaction activity through 2025, just maybe at a slightly more moderate pace than the really hot first half.
Right. It's clear living in Barcelona is definitely in demand. But how does that booming residential side affect the business world? Let's switch gears now. How are the city's commercial property sectors doing? What's the story with offices?
Okay, offices. The office market in Barcelona, well, it had a nuanced Q1 2025. Take-up, that's the amount of space leased, was around 54,000 square meters. Now, that's actually 50% lower than Q1 2024. The main reason seems to be delays in decision-making, companies being a bit cautious, maybe watching global economic signs. But brokers are cautiously optimistic. They expect a rebound later in the year as those postponed deals hopefully come through.
50% lower is quite a drop. Does that mean lots of empty offices then? How are vacancy rates and rents holding up?
It's not uniform, and that's the key thing here. The overall office vacancy rate stayed pretty flat, around 13.8%. But where that vacancy is located is crucial. The 22 at District Barcelona's big tech and innovation hub that accounts for a huge chunk, about 44% of the empty space, mostly because of new projects that just got finished and haven't been fully leased up yet. Contrast that with the traditional central business district, the CBD. Vacancy there is incredibly tight, like around 3%. And that tightness is pushing prime rents up to record highs, about €30 per square meter per month. That's up maybe 4% to 8% over the last year.
Ah, okay. So it's a flight to quality thing we hear about. Only the best, newest spaces are really in demand.
Exactly that. Prime, modern, sustainable offices. Healthy demand, commanding top rents. Older offices, the ones that haven't been updated, they're struggling a bit more. And we're also seeing quite an active trend of converting older offices into residential use. That's attracting value-add investors looking to repurpose those less desirable assets. Helps take some older stock off the market, too.
Interesting. And retail, that's usually a pretty good pulse check for how a city's feeling, consumer confidence and all that, right?
It absolutely is. And Barcelona's retail market, it's made a really impressive comeback, helped hugely by tourism returning strongly and people spending again. Prime high street rents in Q1 2025 hit 275 chu per square meter per month. That's up 10% year on year, and roughly 20% since 2022. These are some of the highest retail rents in Europe right now. Shows the city's pull.
10% year on year, that's a big jump. Real strength there. What about finding space? Is it hard for new shops to get a spot on the main streets?
Incredibly hard. The availability rate on prime high streets is just 2.7%. I mean, that's basically zero vacancy in practical terms. Fashion brands, luxury goods, food and beverage retailers, They're all actively expanding. Q1 2025 saw 20 prime retail leases signed in Madrid and Barcelona combined. That's 11% more than last year. Shows you the activity and the competition for those prime spots.
So what's the outlook for retail? More of the same strong performance?
Well, a record tourism season is expected, which should boost high street spending even more. Prime rents might even nudge slightly above where they were before the pandemic by late 2025. Prime urban retail is seen as pretty low risk, high return right now, so it's definitely a hot target for investors.
Okay, finally, let's talk logistics, industrial space, the backbone of the economy, as they say. What's the demand picture there?
Logistics remains a real standout performer in Barcelona. Q1 2025 saw about 150,400 square meters of logistics space taken up. That's a massive 38% increase compared to Q1 2024. Puts it right up there with record activity levels. Demand is just exceptionally strong. It's driven by 3PLs, that's third-party logistics providers, the companies managing supply chains for others, plus, ongoing e-commerce growth and manufacturing picking up too.
38% increase. So with that kind of demand, supply must be super tight. What's happening with rents for warehouses and such?
Yeah, despite some new warehouses being built, the vacancy rate for logistics space actually fell. It was about 5.7% by March 2025. For modern facilities, that's pretty much full occupancy. Prime logistics rents are now around 8.5 per square meter per month. That's up roughly 10% or maybe more from just 2 years ago. It clearly shows landlords are getting their pricing power back because there's so little space available and land is constrained around the city.
And investment. Is capital flowing into logistics?
Oh, absolutely. Logistics investment volume across Spain was 456 million in Q1 2025 alone. That's up over 30% year on year. Barcelona saw several big deals within that. Prime logistics yields are sitting around 5.0%. And the feeling is they could compress even further, maybe dip below 5% later in 2025. Just because competition for these assets is so strong, the outlook is really positive. Demand is expected to stay high due to those structural shifts in how we buy and move goods.
Okay, looking across these commercial sectors, office, retail, logistics, are there common threads? And any other big picture changes affecting commercial real estate generally?
Yeah, there are definitely unifying themes. For offices, yes, there's new stuff being built in 22 in Acer, but there's also this city strategy to convert older, obsolete offices into other things, residential, student housing, trying to avoid a glut of unwanted space. And across all sectors, really, sustainability and smart building features are becoming critical. It's not just a nice-to-have anymore. These features command premium rents and attract the best tenants. ESG is a big focus.
And those big infrastructure projects like La Sagrera, how do they link into the commercial side specifically?
They're vital for commercial, too. La Sagrera Station isn't just residential. It's creating whole new commercial hubs. New office and retail opportunities will pop up as communities form around it. Plus, the ongoing expansion of the metro lines, L9 and L10s, that improves connectivity for some industrial zones, makes logistics hubs easier to reach. And don't forget, big events. Barcelona hosting the America's Cup in 2024, maybe bidding for the Winter Olympics in 2030. That stuff spurs major investment in hotels and retail. Nearly 440 million euro went into Spanish hotel investments in Q1 25 alone. Events drive commercial activity.
Any other regulations on the commercial side we should know about? Lease changes, development rules?
Yeah, a couple of things. Beyond residential rent caps, the index used for commercial lease increases changed in 2025. Spain moved away from the general inflation rate, CPI, to a new, supposedly more stable index. That could affect how long-term leases are structured. The city's also pushing for more mixed-use developments. So big new projects often have to include things like affordable workspace or community facilities. Creates more integrated projects that serve local needs, not just pure commercial.
So taking all this in, what are investors thinking? Is Barcelona still a hot ticket? Where are they putting their money?
Investors definitely still view Barcelona very favorably. Overall investment volume in Spain was up almost 8% year on year in Q1 2025. Shows resilience, renewed appetite. For Barcelona specifically, yeah, the momentum looks set to continue. Spain's economy is doing reasonably well, and the city just has that global appeal.
And are they favoring particular sectors, given that mixed picture we talked about earlier?
Sentiment is definitely strongest for logistics and prime retail right now. They offer that combination of growth and rents that can keep pace with inflation. Residential investment, especially multifamily, build to rent, that's still a major theme too, driven by that strong rental demand. Office investment, it's been softer, yeah. But there are signs of a turnaround as prices adjust. Value-add investors are definitely circling, looking for older, well-located buildings they can upgrade and modernize.
Right, makes sense. And financing. Are interest rates helping or hurting deals right now?
That's crucial. Spain's borrowing costs, the Euribor rate, They peaked late 2023, early 2024. Now they're coming down. That easing of mortgage rates and borrowing costs, it directly helps investor financing, makes deals more doable, more attractive. CBRE actually put out a report predicting total real estate investment in Spain could grow maybe 15–20% in 2025. A lot of that is thanks to better access to capital.
So foreign investors haven't been scared off by global uncertainty or anything, still keen on Barcelona.
Absolutely. They still see Barcelona as a strategic market. It offers solid long-term fundamentals, and the yields, generally higher than you'd find in many other Western European capitals. So the outlook for late 2025 into 2026, broadly positive. Investors expect rents to keep growing in most sectors, occupancy to stay high, and opportunities to be there. Sure, global geopolitical uncertainty is always a risk factor, but Barcelona's diverse economy, its status as a top tourist and business hub, its ability to attract talent, that provides a lot of underlying confidence for investors looking for stable growth. So yeah, if we try to wrap it all up, Barcelona's real estate market in the first half of 2025, it was really marked by those strong residential price and rent hikes, pretty healthy rental yields, and transaction levels hitting near boom highs, driven by both local and foreign money. And then on the commercial side, you had that booming retail and logistics performance, contrasting with an office market that was a bit slow to start but is now showing signs of recovery.
Right. And we can't ignore the impact of those massive developments, La Sagrera, Camp Nou, plus the new regulations, especially around rent control and those updated lease indexes. They're all definitely starting to reshape the market in real ways.
That's exactly it. The underlying demand fundamentals, they look really robust. Investors' sentiment, generally bullish for the medium term. So the overall outlook for Barcelona real estate through 2025 is, I'd say, one of cautious optimism. Sustained strength in both residential and commercial, even as the market adapts to new policies and continues to capitalize on its fundamental appeal.
It leaves you wondering, doesn't it? As Barcelona keeps evolving, shaped by these powerful market forces, but also by deliberate policy choices, how might its unique mix, that historic charm and modern energy, actually redefine city living and investment going forward, especially as it tries to balance that rapid growth with the really critical need for affordability and sustainability? Something to think about.